Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. This is the third of three U.S.-focused economic update videos that I'm doing. All of these videos follow on the coming storm video that we did about 22 months ago. If you haven't seen that, you really need to. There's a link to watch that for free right next to this video, and that gives you a big picture of what's going on. It's really relevant today. If you've seen that before, then you get the newsletter, and you got the newsletter update earlier this week about the fact that the crisis is here, and we've now seen that in the stock market. As I'm filming this, the stock market's crashing heavily. That big picture is more important than any of these updates, so I recommend you go watch that. But these updates are meant to just keep you informed with what's going on out there. So let me jump into that. James Turk, again probably on King World News, recently said that we're seeing deflation when we measure things in gold, because the price of gold is going up. Gold is real money. Ben Bernanke doesn't want to admit that, but it has always been money. Most of the world recognizes it as such, and so it doesn't really matter what the Fed chairman has to say about it. It is what it is. It is money, and when you measure things, we've had serious deflation in that because gold's going up, so the cost of everything as measured in gold is going down. But when we measure things in the US dollar, which is constantly being devalued, we're seeing inflation. Steve Wynn, who's a big Democrat, he's a very involved Democratic businessman, came out and blasted President Obama because, for the truth, he's going around scaring business owners. There's constantly new threats of taxes and regulation. It makes a business person very scared on what to do. And so Steve Wynn noticed this. That's always who Obama was, so I'm a little confused at how this is new news, but sometimes people, they're just seeing this. California government tried to go after Amazon and just hurt Californians. Again, this is an excellent textbook example of basic economics 101. The California government decided they wanted to get something out of Amazon. So they decided to put new taxes on things. Well, if Amazon did business basically with anyone who is in California who's selling stuff through Amazon. So what did Amazon do? They cut relationship with all those people. So California, instead of just dealing with their own spending problems, they spend massive amounts of money on stupid things, and the state's really hurting because of it. Instead of dealing with the real problem, they tried to grab money from another source. What they ended up doing, while they're supposed to be helping the people, the economic consequence of that is they just hurt the California economy, and they'll get less tax revenue because the California economy is more hurting. That's what happens. So politicians always have money grabs, but it always just hurts the economy as a whole. Record long streaks recently in gold and stocks, in different directions though. Gold having record number of up days, stocks record number of down days. Not ever, but for a long period of time. Fed admits to having 200% more duration risk than normal. So we've talked about this before, but the Fed, because interest rates are so low and they own so many treasuries, are now by far the largest owner of treasuries. These treasuries pay small interest, and so when you own, say, a 10-year treasury bond or any type of bond, and interest rates go up, the bond that you're holding becomes worth less, because if I'm going to sell my bond and the other guy's bond is paying more interest, mine's paying less, you're going to buy the other guy's, you're not going to buy mine. So my bond is worth less if I want to sell it. Well, the Fed has been buying such outrageous amounts of U.S. treasuries, and they've allowed their duration, the amount of time before the bond comes due, to expand in order to manipulate basically the dollar. They are in this situation where they have a tremendous amount of risk. So as interest rates go up, the Fed's basically going to go bankrupt. However, if you remember 6 months ago or so, we talked about the fact that they actually changed the rule that they can put it on the Treasury's books or blame it on the Treasury accounting wise. So no company, no person could do that, but they've rigged their own books. So they can't technically go bankrupt. They've kind of fixed that, but it's Enron accounting. I mean, they're going to technically go bankrupt soon as interest rates rise. There's just no getting around that. And so it was interesting to see one of the Fed guys actually admitting that. Super Congress. Okay, here's where I was talking about this. I talked about that in the last video. President Obama ignoring laws. This is interesting. Apparently there's a law with Medicare. If Medicare is not funded properly, I think that was with a 7-year time horizon, that the president must propose to Congress a way to fix that funding problem. Well, 2 years in a row, that has been the case. The trustees of Medicare, which are some of Obama's closest confidants, have informed him that he has this responsibility to change the funding of Medicare because it's going to go bankrupt. And he has chosen to ignore it. Now, a year ago, he had a Democratic Congress, so the Democratic Congress just gave him a pass. They passed a bill that said he didn't have to do that, even though it's the law. This year, because the Republicans have the House, they didn't give him a pass. He's just ignoring his lawful responsibility. So again, it's an issue. It's not new news that Social Security and Medicare are going to go bankrupt. It's a serious problem, but I mean, we already know it's being ignored, but here it's specifically lawfully being ignored. Fed gave $16 trillion in emergency loans to banks around the world. So you've probably heard that. That is the size of the entire U.S. economy. It's a little bigger than the U.S. economy. It's about 1/4 the size of the economy of the world. In a short amount of time, the Federal Reserve gave that much in emergency loans to banks around the world, foreign banks. It's crazy. IMF wants more money. So they've gotten more money many times since 2007. Last year they doubled their funds, and now they need more. They're trying to do more and more bailouts, and so they're massively expanding their balance sheet, and still they need more. They need more. The reality is this whole system's not tenable. It's going to collapse. They keep thinking one more bailout, one more loan will fix the problem, but the problem is too much debt. More debt is not going to fix it. Head of Obama's Jobs Council is moving jobs overseas at a blistering pace. So the CEO of GE is head of President Obama's Jobs Council, and he's got some crazy quotes about how everyone needs to do their fair share. Meanwhile, his company is sending massive amounts of jobs overseas. I don't have a problem with companies putting their jobs wherever they need to. I do have a problem with that kind of hypocrisy of saying one thing and doing something completely different. The reality is, if the United States would stop all the massive regulation and taxation, companies will want to have their employees in the United States. But because of the law and the system that our government has set up, it makes much more sense for them to have employees in other places. So this is the natural outflow. It's not like these companies are against America and they're trying to do something sneaky. They're just trying to run a business. And the current laws in this country make it very difficult for them to hire Americans, and so they go someplace where it's a lot easier. So he knows that. He just should officially say what he already knows, and they should work on the real problem instead of just telling the rest of us that we should behave in a different way other than our own interest. Survey of central bankers says the U.S. dollar will not be the world reserve currency in 25 years. This is a huge change. Just in the time I've been doing these videos, we've seen a similar survey. It was probably a year ago, and they absolutely saw the dollar continue to be the world reserve currency. Well, now that's switched. That's a huge sign of what's coming. China and Russia are outraged. They're calling us leeches at the U.S. in the way that our debt antics. Again, as I said before, I think they consciously did this on purpose, trying to weaken the dollar. But it's outraging the Chinese and the Russians because they understand, Chinese are owed a lot of that money, Russians a decent amount. And so that's part of it. The other problem is it's just going to hurt the whole world economy. And the U.S. has been given a leadership position in that, and they're driving the whole world into the ground. So they're not liking that. That's all I have for this video. I'm going to jump into, I think, gold and silver in the next video. Again, if you haven't seen the Coming Storm video, there's a link to do that for free. I recommend it. Thanks you for watching. God bless you.